Hi, welcome. It's Mary Ellen McGonagle, Senior Managing Director of Equities at Simpler Trading. Today, I'm going to be sharing with you key characteristics of stocks that go on to far outpace the broader markets. What I'll be sharing with you is based on a study by Bill O'Neill, where he went back many market cycles and studied the key characteristics common among those stocks that go on to far outpace the broader markets. This is a system that I shared with top fund managers throughout the world. And again, it is based on factual information going back over many broader market cycles. So let's get started. First up, we're going to look at some of those important factors that you do want to take into account before buying a winning stock. First up, you want to make sure that the broader markets are in an uptrend. In essence, having that wind behind your sails. We're going to take a look at the broader markets where they stand currently and some of the ways that you can stay on top of the health or weakness of the markets. Secondly, is the stock you are considering fundamentally strong? And I'll share with you what is meant by that and how you can quickly uncover whether your stock has strong fundamentals. Last up, you need to make sure that the chart for that stock is positive. And again, we will get into that as we review winning stocks from prior market cycles. So, first up, understanding why fundamentals are so critical in these winning stocks. First up is the fact that the primary driver of a winning stock is strong earnings. Again, factually based. Those strong earnings are led by strong sales. So you will want to make sure that both the sales and earnings for a given company are strong. Last up is the fact that these strong fundamentals will attract institutional investors, which in turn, their money flows will help keep that stock elevated. So again, the major driver of a big winning stock is earnings per share growth. And as you know, earnings do come out quarterly. You want to make sure that the stock that you own shows a major percentage increase in quarterly earnings year over year, better known as EPS. And again, we are going to be using historical precedents as a guide. Let's take a look. First up here is the broader markets currently, a daily price chart of the S&P 500. You want to make sure of several components here. First up is the fact that the RSI, that relative strength indicator, and the MACD are both in positive territory above that net neutral zero. And then also you want to make sure that the index is above its key moving averages. In this case, I have a 10, 21, 200, and 50-day simple moving average. This red 50-day is going to be the most critical as it relates to the S&P retaining its uptrend. You want it to be above this key moving average. Likewise, if it breaks below that 50-day simple moving average, coupled with the negative RSI and MACD, the odds are that we are heading lower. We simply only need to go back to February into March of 2025 to see those characteristics when the S&P 500 closed below this 50-day simple moving average. The RSI and MACD entered negative territory, and we did go into a bear market. I've also highlighted some other areas you want to be aware of, and that is possible resistance. And I'm talking in this case about the bear market recovery. We did need to get back above this area of possible resistance and also post what is called a follow through day. And that is where the index is up at least 1.25% higher than the prior day on increased volume over that prior day. And it also needs to take place at least 4 days out from a new bottom, which was put in on April 7th. So we did execute that. We had a follow through day, and then we subsequently from there, we can now have the green light to buy stocks, and subsequently the move back above that 50-day simple moving average after moving above resistance provides further confidence in that follow through day. So from here, we're going to take a look at some stocks. And first up is Adobe Systems, ADBE. And we are going back to 2020 into 2021, and a couple of items of note here. First up is the fact that in mid-June, the stock broke out of a base on very heavy volume. The reason for that is analysts were raising earnings estimates higher prior to Adobe's release of earnings. This is a bullish characteristic. Oftentimes, Wall Street analysts will not raise those estimates unless going right into earnings, unless they have very sound reasons. This gap up in price later in June did signify this was that earnings release, and it was a very strong earnings report. And subsequently, we did get this significant rally going into September, another pickup of that rally, and then another pullback into December. I'm highlighting that both of those pullback periods were in line with a pullback in the broader markets. In other words, Adobe's fundamentals had not shifted or gone weak. It's more about the broader markets, and you will want to have sell disciplines in place so that you do not participate in this significant downdraft. So, moving through, taking a look at another example, we're looking at Amazon, and I'm taking you back to 2017 into 2018. And again, highlighting the release of earnings that came in above estimates. So, very, very strong earnings. You can see the high volume characteristics in May of 2017, and the stock went on to outpace the markets. Again, another earnings release in November, and we at that time came in with earnings that were well above expectations that were rather low, hence the gap up into a nice uptrend. And then also management guided earnings estimates higher going forward. This is another bullish fundamental characteristic. And last up, February of 2018, the company posted their largest quarterly revenue, and this was all about Whole Foods executing solid sales. And again, the stock, upon the release of those strong fundamentals, did enter into an uptrend and outpace the broader markets. Next up is looking at a current view of Amazon. And what I wanted to highlight for you here is the fact that Amazon came out with strong earnings back here. We are looking at a weekly chart, and I'm taking us to April of 2025. They posted earnings that were above estimates, and you can see that the stock subsequently has entered into a new uptrend. And then also taking us back to 2023, in that fourth quarter, the company did post another very strong earnings, triple digit year over year growth, and the stock did go into the beginning of 2024 in a very confirmed uptrend, and also far outpaced the broader markets. Next up is CF Industries, and again, I'm taking us back historically to 2022 into 2023. 2023, and highlighting other characteristics in addition to strong fundamentals, and that is geopolitical news. And in this case, Russia did invade Ukraine, which increased the need for CF Industries fertilization products. And this is because Ukraine was a major provider of grains, and there was need for other companies and other countries to come in and pick up that slack. So we did see the stock far outperform going into the news of Russia's invasion of Ukraine. But prior to that, in February of 2022, CF did post earnings that came in above estimates. So we did have that strong fundamental backdrop in addition to geopolitical news that pushed CF to a new high in price. As we entered into 2023, the company did begin to report earnings that were below estimates and also year over year decelerating. And we can see the significant negative impact that those negative earnings had on the stock. Next up is a current view of CF Industries, and I'm taking us to the beginning of May of 2025, and the company reported earnings of 118% versus that same quarter a year ago. And take a look at the sharp uptrend here and the response to that very strong earnings report. And next up here is Alphabet, of course, GOOGL, and again, taking us back to the period in 2021. We are looking at a weekly chart. And at this point in time, the company reported very strong earnings, which in turn began Alphabet's growth cycle. Take a look at this sharp outperformance that took place going into 2022. And of course, at that time, we did enter a bear market, and Alphabet deteriorated with the broader markets. But let's again take a look at a new positive earnings cycle that took place going into 2023. The company reported earnings at this point in time and continued throughout 23 to report strong earnings, and you can see this very sharp outperformance. So in essence, we can see that earnings are a key primary driver of stocks that go on to outpace the broader markets, and many trading platforms now include that earnings information for you so that you can stay on top of a company's growth or deceleration that in turn greatly impacts the stock. Also take into account the broader markets. You can see here with Alphabet how impactful a bear market will have on most stocks during that time period. And last up is the fact that geopolitical considerations need to also be taken into account. At this point in time, oil prices are currently rising because Israel has struck Iran. So that's it for today. If you haven't already, use the link below to trial my twice weekly MEM Edge report. Until next time, take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me over.